Sian Flowers was established in 1993. The inspiration for the founders was climate was ideal, the workforce was ideal, and also our access to the European markets was there where most flowers were being sold to. My name is Peter Chesrem. I'm a director with the Sian Flowers group. We are at Equator Flowers in Eldoret, and this is one of our 4 farms. Sian Flowers is one of the largest producers of cut roses in the world, particularly spray roses. We have got 4 farms across Kenya. We started off with Agriflora in 1995, and then we moved on to Equator in 1997, Masai Flowers in 2008, and in 2019 we had our latest venture, Sololo Agriculture, where we grow mainly summer flowers. Sian Roses actually serves mainly the European markets. About 60% of our flowers go to Europe, both to the auction and also to direct customers who are selling in supermarkets and wholesalers. We grow not just roses, but we also grow summer flowers as well. It's been a steady growth since we began. We used to grow single-headed roses. We've moved on to spray roses, and now we've also added summer roses onto our portfolio of products. And we're also now moving into packed at source bouquets. Our partnership with Absa has evolved over time because initially when we started off in the early 90s, they assisted us to set up the different initial farms, and they've continued to help us to expand to the new farms as well. For a business like Sian Flowers, with our wide supply across the world, it's important to have a banking partner like Absa because of their financial muscle. We're able to have that support as we grow. Absa has provided us with loan facilities, especially when we're setting up our new products, when we're expanding the farms, when we're establishing our irrigation systems. Sustainability is important for us because as we've seen over the years, both our customers are demanding it, but also our local communities are demanding for us to be more sustainable. Absa has assisted us to engage in projects such as setting up our solar plants across the 4 farms. We've been able to cut 40% renewable energy across our farms, which not only reduces our costs, but also reduces our carbon footprint. It's important for our customers to know that we're finding the most sustainable ways to produce these roses, which will go a long way towards ensuring that in the future that our environment is actually kept clean and good. We employ over 2,500 employees across our 4 farms. So the biggest impact that Absa has had on our business was actually during the COVID-19 pandemic. With Absa's support, we're able to work out how we can continue with this project, because during that period, a lot of organizations were scaling down their operations, whereas we were actually starting off a whole new farm and creating a whole new strategy for the Sian Flowers group. Absa's support was really significant during that period because we actually laid off 0 staff, and even for our customers, they knew that if we could get through that period unscathed, there was actually a lot of room for growth and they could rely on us. So the future plans of Sian Flowers is we want to actually move towards bouquet making. Currently, we send our flowers as mono bunches. We're seeing a steady progression of more of that value addition being moved to Kenya. So as Sian Flowers, we want to actually make 90% of our exports to be bouquets. That'll actually create more employment. It will increase our revenues as a company. As we move into value addition, it's going to be quite a massive project. But we know that with Absa, as we've been through the last 25 years, we'll be able to achieve our goals and ensure that for the coming decades, we'll actually be able to meet our market needs. Absa has taken the time to understand our story. They've been with us from the beginning when we started off on 20 hectares, and now we're over 200 hectares. Over that period, Absa has got to know our story and where we're going to. Because of that, we are confident that the future for Sian Flowers is bright.
An excellent cup of tea often inspires a great story. This is a story of Global Tea and Commodities Limited. My name is Lalindra De Silva. I am the financial controller of Global Tea and Commodities Kenya Limited. We are by far the largest tea exporter in Kenya and probably in East Africa as well. Plus, we export tea to various countries such as the UK, the Middle East, West Africa, South America. Literally, you could find our tea all around the world. We have a wide range of teas, and by far we are the market leaders in the premium segment. Kenya has been one of the largest tea producing countries in the world. So us as Global Tea, we have strategically placed ourselves to ensure that the Kenyan tea reach to its proper destined customers, especially in the European markets, in the UK, where the Kenyan tea is found in almost all supermarket shelves. Our group as a whole has employed close to 1,000 employees and bettering the livelihoods of our fellow Kenyans. Out of that, 60% are ladies. That creates a ripple effect on their families. What about the youth? You have so much of people working in the port. We need drivers, we need turnboys. So all these employment opportunities come up. And also when you're loading the teas, the tea industry, also global tea, with the amount of volumes we generate, has had a positive impact on Mombasa. We've been with Absa for quite some time. Our relationship really took off last year, where we got into working capital funding with Absa. The facilities which we enjoy from Absa has helped us grow our business in the last year tremendously. Today, the current trade environment in the world is ever changing. We face so much of challenges, from delays in shipping lines, to getting the teas out, to foreign currency problems. One of the rainbows in the storm has been Absa's TMO system, where now we don't need to send physical documents to the bank anymore. We just need to upload the documents on the Absa system and our job gets done. Our invoices get discounted within the same day the payments come through. It's a system which have clearly understood a need in the market and has been a game changer. Absa is a bank which understands the client's needs. They understood what global tea required. When you start growing, you need a bank which can fund that growth as well. Absa was the first bank to put their hands up and say, we would like to partner with you. Looking back 30 years ago, from starting from one warehouse to setting up the largest tea processing plant in East Africa, we have come a long way. That has been our story. There are so many pages more which needs to be written, and I am extremely happy that Absa has partnered with us. Together, we can write the next chapter of our story. A story which involves growth, employment opportunities, more funding coming into the country, and taking Kenyan tea to the next level.
Sian Flowers was established in 1993. The inspiration for the founders was climate was ideal, the workforce was ideal, and also our access to the European markets was there where most flowers were being sold to. My name is Peter Chesrem. I'm a director with the Sian Flowers group. We are at Equator Flowers in Eldoret, and this is one of our 4 farms. Sian Flowers is one of the largest producers of cut roses in the world, particularly spray roses. We have got 4 farms across Kenya. We started off with Agriflora in 1995, and then we moved on to Equator in 1997, Masai Flowers in 2008, and in 2019 we had our latest venture, Sololo Agriculture, where we grow mainly summer flowers. Sian Roses actually serves mainly the European markets. About 60% of our flowers go to Europe, both to the auction and also to direct customers who are selling in supermarkets and wholesalers. We grow not just roses, but we also grow summer flowers as well. It's been a steady growth since we began. We used to grow single-headed roses. We've moved on to spray roses, and now we've also added summer roses onto our portfolio of products. And we're also now moving into packed at source bouquets. Our partnership with Absa has evolved over time because initially when we started off in the early 90s, they assisted us to set up the different initial farms, and they've continued to help us to expand to the new farms as well. For business like Sian Flowers, with our wide supply across the world, it's important to have a banking partner like Absa because of their financial muscle. We're able to have that support as we grow. Absa has provided us with loan facilities, especially when we're setting up our new products, when we're expanding the farms, when we're establishing our irrigation systems. Sustainability is important for us because as we've seen over the years, both our customers are demanding it, but also our local communities are demanding for us to be more sustainable. Absa has assisted us to engage in projects such as setting up our solar plants across the 4 farms. We've been able to cut 40% renewable energy across our farms, which not only reduces our costs, but also reduces our carbon footprint. It's important for our customers to know that we're finding the most sustainable ways to produce these roses, which will go a long way towards ensuring that in the future that our environment is actually kept clean and good. We employ over 2,500 employees across our 4 farms. So the biggest impact that Absa has had on our business was actually during the COVID-19 pandemic. With Absa's support, we're able to work out how we can continue with this project, because during that period, a lot of organizations were scaling down their operations, whereas we were actually starting off a whole new farm and creating a whole new strategy for the Sian Flowers group. Absa's support was really significant during that period because we actually laid off 0 staff, and even for our customers, they knew that if we could get through that period unscathed, there was actually a lot of room for growth and they could rely on us. So the future plans of Sian Flowers is we want to actually move towards bouquet making. Currently, we send our flowers as mono bunches. We're seeing a steady progression of more of that value addition being moved to Kenya. So as Sian Flowers, we want to actually make 90% of our exports to be bouquets. That'll actually create more employment. It'll increase our revenues as a company. As we move into value addition, it's going to be quite a massive project. But we know that with Absa, as we've been through the last 25 years, we'll be able to achieve our goals and ensure that for the coming decades, we'll actually be able to meet our market needs. Absa has taken the time to understand our story. They've been with us from the beginning, when we started off on 20 hectares, and now we're over 200 hectares. Over that period, Absa has got to know our story and where we're going to. Because of that, we are confident that the future for Sian Flowers is bright.
We continue to execute our strategy. It's dynamic. We have the strategic flexibility, strategic capability to help Kenyan businesses work through the challenges that they experience. For us in Absa, sustainability is core to the purpose of the organization, empowering Africa's tomorrow together, one story at a time.
Visa Infinite is just one of the aspects of Absa Premier that we bring you. Absa Premier is basically anchored on client centricity.
The launch of the Absa Kenya Foundation marks a defining moment in our commitment to sustainability, signaling our dedication to the shaping of new narratives with the communities that we serve.
We partnered with Greenland Girls High School to empower the girls that are in this school, most of whom are teenage mothers, to encourage them and to listen to their stories. We know that every story matters.
The facilities which we enjoy from Absa has helped us grow our business in the last year tremendously. Absa is a bank which understands clients' needs.
I would like non-Absa customers to come on board and bank with Absa.
Don't waste this opportunity. Just rush to the branch near you and open an account with Absa. You will enjoy the experience.
Tulikutana na wana Absa Bank, wale walikuwa nafanya field marketing, wakanipata. That was back 2019. Niko na miaka 6 sasa hivi. Kutoka hapo nikakuwa sasa an entrepreneur, Bewamos Enterprises. Nikakuwa na another branch ambayo inaitwa Bewamos B, iko highway. nikakuwa na another branch ambayo inaitwa Bewamos C. Leo hii niko na wafanyakazi 51. Workers wote ni members wa Absa Bank. Kando na kuwa member pale, tumekuwa marafiki wote. So nataka kusema asanti, na ninaamini ya kwamba hii safari bado tutaendelea, na siwezi sema kuna kitu ambacho ninaweza sema mbaya kwa Absa Bank. 100%.
Sian Flowers was established in 1993. The inspiration for the founders was climate was ideal, the workforce was ideal, and also our access to the European markets was there where most flowers were being sold to. My name is Peter Chesrem. I'm a director with the Sian Flowers group. We are at Equator Flowers in Eldoret, and this is one of our 4 farms. Sian Flowers is one of the largest producers of cut roses in the world, particularly spray roses. We have got 4 farms across Kenya. We started off with Agriflora in 1995, and then we moved on to Equator in 1997, Masai Flowers in 2008, and in 2019 we had our latest venture, Sololo Agriculture, where we grow mainly summer flowers. Sian Roses actually serves mainly the European markets. About 60% of our flowers go to Europe, both to the auction and also to direct customers who are selling in supermarkets and wholesalers. We grow not just roses, but we also grow summer flowers as well. It's been a steady growth since we began. We used to grow single-headed roses. We've moved on to spray roses, and now we've also added summer roses onto our portfolio of products. And we're also now moving into packed at source bouquets. Our partnership with Absa has evolved over time because initially when we started off in the early 90s, they assisted us to set up the different initial farms, and they've continued to help us to expand to the new farms as well. For a business like Sian Flowers, with our wide supply across the world, it's important to have a banking partner like Absa because of their financial muscle. We're able to have that support as we grow. Absa has provided us with loan facilities, especially when we're setting up our new products, when we're expanding the farms, when we're establishing our irrigation systems. Sustainability is important for us because as we've seen over the years, both our customers are demanding it, but also our local communities are demanding for us to be more sustainable. Absa has assisted us to engage in projects such as setting up our solar plants across the 4 farms. We've been able to cut 40% renewable energy across our farms, which not only reduces our costs, but also reduces our carbon footprint. It's important for our customers to know that we are finding the most sustainable ways to produce these roses, which will go a long way towards ensuring that in the future that our environment is actually kept clean and good. We employ over 2,500 employees across our 4 farms. So the biggest impact that Absa has had on our business was actually during the COVID-19 pandemic. With Absa's support, we're able to work out how we can continue with this project, because during that period, a lot of organizations were scaling down their operations, whereas we were actually starting off a whole new farm and creating a whole new strategy for the Sian Flowers group. Absa's support was really significant during that period because we actually laid off 0 staff, and even for our customers, they knew that if we could get through that period unscathed, there was actually a lot of room for growth and they could rely on us. So the future plans of Sian Flowers is we want to actually move towards bouquet making. Currently, we send our flowers as mono bunches. We're seeing a steady progression of more of that value addition being moved to Kenya. So as Sian Flowers, we want to actually make 90% of our exports to be bouquets. That'll actually create more employment. It will increase our revenues of the company. As we move into value addition, it's going to be quite a massive project. But we know that with Absa, as we've been through the last 25 years, we'll be able to achieve our goals and ensure that for the coming decades, we'll actually be able to meet our market needs. Absa has taken the time to understand our story. They've been with us from the beginning when we started off on 20 hectares, and now we're over 200 hectares. Over that period, Absa has got to know our story and where we're going to. Because of that, we are confident that the future for Sian Flowers is bright.
An excellent cup of tea often inspires a great story. This is a story of Global Tea and Commodities Limited. My name is Lalindra De Silva. I am the financial controller of Global Tea and Commodities Kenya Limited. We are by far the largest tea exporter in Kenya and probably in East Africa as well. Plus, we export tea to various countries such as the UK, the Middle East, West Africa, South America. Literally, you could find our tea all around the world. We have a wide range of teas, and by far we are the market leaders in the premium segment. Kenya has been one of the largest tea producing countries in the world. So us as Global Tea, we have strategically placed ourselves to ensure that the Kenyan tea reach to its proper destined customers, especially in the European markets, in the UK, where the Kenyan tea is found in almost all supermarket shelves. Our group as a whole has employed close to 1,000 employees and bettering the livelihoods of our fellow Kenyans. Out of that, 60% are ladies. That creates a ripple effect on their families. What about the youth? You have so much of people working in the port. We need drivers, we need turnboys. So all these employment opportunities come up. And also when you're loading the teas, the tea industry, also Global Tea, with the amount of volumes we generate, has had a positive impact to Mombasa. We've been with Absa for quite some time. Our relationship really took off last year, where we got into working capital funding with Absa. The facilities which we enjoyed from Absa has helped us grow our business in the last year tremendously. Today, the current trade environment in the world is ever changing. We face so much of challenges, from delays in shipping lines, to getting the teas out, to foreign currency problems. One of the rainbows in the storm has been Absa's TMO system, where now we don't need to send physical documents to the bank anymore. We just need to upload the documents on the Absa system and our job gets done. Our invoices get discounted within the same day the payments come through. It's a system which have clearly understood a need in the market and has been a game changer. Absa is a bank which understands the client's needs. They understood what Global Tea required. When you start growing, you need a bank which can fund that growth as well. Absa was the first bank to put their hands up and say, we would like to partner with you. Looking back 30 years ago, from starting from one warehouse to setting up the largest tea processing plant in East Africa, we have come a long way. That has been our story. There are so many pages more which needs to be written, and I am extremely happy that Absa has partnered with us. Together, we can write the next chapter of our story. A story which involves growth, employment opportunities, more funding coming into the country, and taking Kenyan tea to the next level.
Sian Flowers was established in 1993. The inspiration for the founders was climate was ideal, the workforce was ideal, and also our access to the European markets was there where most flowers were being sold to. My name is Peter Chesrem. I'm a director with the Sian Flowers group. We are at Equator Flowers in Eldoret, and this is one of our 4 farms. Sian Flowers is one of the largest producers of cut roses in the world, particularly spray roses. We have got 4 farms across Kenya. We started off with Agriflora in 1995, and then we moved on to Equator in 1997, Masai Flowers in 2008, and in 2019 we had our latest venture, Sololo Agriculture, where we grow mainly summer flowers. Sian Roses actually serves mainly the European markets. About 60% of our flowers go to Europe, both to the auction and also to direct customers who are selling in supermarkets and wholesalers. We grow not just roses, but we also grow summer flowers as well. It's been a steady growth since we began. We used to grow single-headed roses. We've moved on to spray roses, and now we've also added summer roses onto our portfolio of products. And we're also now moving into packed at source bouquets. Our partnership with Absa has evolved over time because initially when we started off in the early 90s, they assisted us to set up the different initial farms, and they've continued to help us to expand to the new farms as well. For a business like Sian Flowers, with our wide supply across the world, it's important to have a banking partner like Absa because of their financial muscle. We're able to have that support as we grow. Absa has provided us with loan facilities, especially when we're setting up our new products, when we're expanding the farms, when we're establishing our irrigation systems. Sustainability is important for us because as we've seen over the years, both our customers are demanding it, but also our local communities are demanding for us to be more sustainable. Absa has assisted us to engage in projects such as setting up our solar plants across the 4 farms. We've been able to cut 40% renewable energy across our farms, which not only reduces our costs, but also reduces our carbon footprint. It's important for our customers to know that we're finding the most sustainable ways to produce these roses, which will go a long way towards ensuring that in the future that our environment is actually kept clean and good. We employ over 2,500 employees across our 4 farms. So the biggest impact that Absa has had on our business was actually during the COVID-19 pandemic. With Absa's support, we're able to work out how we can continue with this project, because during that period, a lot of organizations were scaling down their operations, whereas we were actually starting off a whole new farm and creating a whole new strategy for the Sian Flowers group. Absa's support was really significant during that period because we actually laid off 0 staff, and even for our customers, they knew that if we could get through that period unscathed, there was actually a lot of room for growth and they could rely on us. So the future plans of Sian Flowers is we want to actually move towards bouquet making. Currently, we send our flowers as mono bunches. We're seeing a steady progression of more of that value addition being moved to Kenya. So as Sian Flowers, we want to actually make 90% of our exports to be bouquets. That'll actually create more employment. It will increase our revenues as a company. As we move into value addition, it's going to be quite a massive project. But we know that with Absa, as we've been through the last 25 years, we'll be able to achieve our goals and ensure that for the coming decades, we'll actually be able to meet our market needs. Absa has taken the time to understand our story. They've been with us from the beginning when we started off on 20 hectares, and now we're over 200 hectares. Over that period, Absa has got to know our story and where we're going to. Because of that, we are confident that the future for Sian Flowers is bright.
pages, including YouTube, Facebook, and LinkedIn. If you're one of those who are connecting with us in those platforms, we welcome you to engage with us. You can drop comments, or likes or questions, and we will engage with you in the best way possible. If you're in the room and you're still having your breakfast, no problem. We are okay. You can continue doing that. I think the service will continue outside. But I think before we begin the program, it's just in good order that we introduce some of the leadership team from Absa Bank that is here. I will leave out our chairman, who will be coming up on stage to address us shortly. And I will also leave out our managing director and CEO, that's Abdi Mohammed, and I'll leave out our CFO, who is Yusuf Omari, and I'm sure all well known to you. I'd like to introduce Moses Muthui. Moses Muthui is our consumer banking director. If you're here and you don't have a commercial relationship with Absa, that guy is a big boss, but he can open an account for you. Then I'll go to Mwihaki Washira. Mwihaki Washira just joined us about a month ago. She's our director for marketing and corporate affairs. If you've got any ideas on what we could do to improve our brand, or you have good things to say about our brand, that's the lady to talk to. Then we have Sharon Ingari, who is our internal auditor. There is not much to say about that role here in a public forum, but she keeps us in tow, and she ensures that we do what we say we are doing. Then we've got Elizabeth Wasuna, is our business banking director. If you run a business, a small, medium business, and you'd like to understand what we do there, then that's the lady you speak to. That's Albert Majio, is our chief of staff to our managing director. On that table, we've got Stella Mambo, who is director of our global markets. If you want to understand anything from FX, to structured risk products and how we can help your business navigate, some of the issues happening in our macro space, that's the lady to speak to. Next to Stella is Sophia. Sophia, again, just joined us as our country treasurer. And next to Sophia is James Agin, corporate and investment banking director. He takes care of big corporates, large multinationals, the public sector, etc. As you can tell, we are one of the well-balanced, gender-wise, organization in the market from a leadership perspective, and that's something that is deliberate and something that we take pride in. I think we are ready. We are ready to start. We will have a time within this program where we will take questions. So bear with us if you find something that you'd like to clarify on, and we will provide you with that chance at the right time. But I think to kick us off, I'm happy to invite our chairman, Mr. Charles Moshene, to make opening remarks. Chairman, a round of applause, please, for our chairman. Thanks.
They say that calm waters don't make great sailors and skillful sailors. 2024 was anything but calm. But the story that we have for you is about the outcomes. It's about the strength of the business and the resilience to be able to navigate those waters, emerge much stronger and more prepared to fulfill our purpose. Distinguished customers, clients, colleagues, members of the press, investors, both in the room and on our online platforms, I welcome you. And I also thank you for being with us as we reflect on the year that was. And I'll make just a few comments around the operating environment and about the performance of the business during 2024. As far as the operating environment goes, I think we are all very familiar with the the shape that the year took. And the effects that we saw were not just local, they were regional as well as global. We had significant headwinds when it came to global macroeconomic factors, which trickled down to environment. We had geopolitical factors, which also trickled into our environment. And locally, we also had our challenges. And the effect of all that was that our customers tell us that their customers are encountering suppressed demand for their services and goods, mainly because of reduced purchasing power by customers. They're having difficulties accessing credit because of the cost of credit. And for those who already had credit, some of them were having challenges meeting their commitments. And so it's within that kind of environment that we undertook the business of Absa Bank Kenya PLC. But our activities are guided by our strategy. And at these kinds of meetings, we keep on reminding you of what our strategy is. But if I could just give you a few headlines. We are intent on growing this business, growing it at a rate that is faster than competition, which means we're winning market share. But it needs to be growth that is profitable and that is sustainable, and a growth that places a lot of emphasis on what we call capital-light services, which are non-traditional services. So that's a strategy around growth. And the intention is that this bolsters the return on equity so that the investors in this business get a decent return. But that is after we have taken care of all the stakeholders as well. So taking care of our stakeholders is really, really important. So our management team was tasked with the job of executing the strategy, and 2024 was the second year of our 5-year strategy. So all the focus was on implementation. And the biggest issue or task that management had was how to navigate those challenges in the environment that I talked about. Because it's not that there will ever be an environment without challenges. It's a question of how ably and how nimbly you navigate those challenges to achieve your objective without losing sight of the overall strategy of the business. And that's what management was busy on during the year. And at the end of the year, when we as a board looked at the performance, which we'd been monitoring on a quarterly basis, we were pleased with the outcomes because the outcomes demonstrated that we were on our strategic trajectory, that we were navigating well in the environment, that we were achieving the targets that we had set ourselves, and we were truly on the journey to fulfilling our purpose of empowering Africa's tomorrow together, one story at a time. So when I look back at the performance during 2024, and Abdi will give you a much more detailed review of that on a balanced scorecard basis, a few things stand out around how we continued to expand our services to a wider range of individuals, how we continue to provide solutions and look for solutions with customers to make sure that we are responding aptly to the needs of individual customers or individual groups of customers. It's around how we've continued to make investments to this business to make it stronger for the future and future ready. Investments in all areas, while at the same time making sure that we are meeting the short-term needs of the providers of capital to this business. When you look at areas around talent, we are truly on the road to becoming the home of talent. And that has been acknowledged year after year by the accolades that we get as the employer of choice in this marketplace. Our brand continues to do remarkably well and become well known in this marketplace. And then when you look at the financials, which are just the outcomes of the many things and many activities that have been undertaken during the year, you see that the business still continues to grow. The business is firing on all engines. All parts of the business are growing. And you also find that the return on equity has improved from the previous year. And at the middle line, which is around costs, is well managed. So a really good outcome in the execution, from the execution of the strategy. But outcome and performance is not all about numbers. Sustainability is something that is really important, a strand to our strategy. And so we have continued to pursue our sustainability agenda, or our ESG agenda. And as a provider of finance, supporting the environment by funding sustainable projects is one of the keys, and we've continued to play a big role in that area. We disbursed in the region of 47 billion shillings in that space. We continue to support key players in our marketplace. And as we all know, SMEs are really the engine that drives our economy, and we continue to play a bigger role in that segment. And not just in providing finance, but we've gone beyond that and do provide non-financial support, such as skills, training, and that kind of support to make them better, in recognizing that to be able to manage your finances well, you do need a certain suite of skills. And we've been partnering with our customers in that area. And then in the course of 2024, we launched the Absa Kenya Foundation, which is the vehicle that we're going to use moving forward to execute our ESG agenda. And that's really a great move, because then it enables the bank to partner through this foundation with other like-minded parties to have a greater impact in the programs that we undertake in that space. So I'll leave my comments on performance there. Abdi and Yusuf will flesh them out for you. But looking ahead, we are confident that this business will continue on its trajectory, on its growth trajectory, as encapsulated in our strategy, because the business is in good hands, the business is focused, and because we are putting all the effort to ensure that we anticipate the challenges, we work our way around them, and also look at challenges as dark clouds that also tend to have silver linings. Look for the silver lining and move with agility and speed to capitalize on the opportunities that arise. So as we move forward, I'm confident we're going to write many more positive stories about the growth of this business. Thank you very much, ladies and gentlemen.
Thank you, Chairman. He's a great man of great poise and very carefully selected words. We thank you, Chairman. I'd like to introduce Julius Kamau, who just joined us. Julius is our Chief Operating and Digital Officer. Julius. Thank you. All right. I think, as Chairman said, for us, everything we do is centered around human beings and just how we impact the stories that are behind the many customer numbers that we talk about. And at this point, I want to invite our Managing Director, Abdi Mohammed, who will take you through a series of pieces of information that will give you a sense of just how we went about executing our strategy in 2024. Abdi.
Thank you very much. Thank you, Charles. Let me set up here. Good morning, everybody. Our chairman, Mr. Charles Mushene, investors, customers, stakeholders, my colleagues from Absa, members of the media, good morning, everybody. I'm Jambo. It's the Ramadan time, as well as Lent. So it's that fasting and holy season. And one of the questions people ask me the most is, when is the Eid holiday? And I always say, I don't know. I don't know yet until it's announced. The chairman covered quite a bit of ground in terms of setting the platform on which we will present. Over the next few minutes, I will go through the strategic execution and what we have been doing as a leadership team to drive the strategic agenda of the organization. And then we'll have the drum rolls and invite Mr. Yusuf Omari to share what that means in terms of numbers and financials and where we've ended up as an organization for full year 2024. But before I come into the Absa story itself, maybe just to cover a little bit around the macro environment and the context within which we operated in the course of the year 2024. Some numbers there, positives as well as challenges. As you all know, the GDP numbers for Kenya have remained quite resilient over the last few years. A well-balanced and diversified economy in terms of the different sectors and showing up in terms of a consistent performance. During the course of the 12 months, we've seen significant improvement in the inflation numbers, to a large extent because of a very deliberate monetary policy that has been adopted by the MPC and the central bank, and we've worked very closely with them during that period of time. But also, as a result of good performance in the agricultural sector and food prices heading in the right direction, as well as fuel and energy prices generally being within expectations. So the inflation number is sitting well within the target range and, in the lower single-digit numbers. We've seen once inflation was contained, the MPC has then started an accommodative monetary policy that has seen the CBR reduce over a period of time starting in the second half of last year. And you would have seen through the announcements that as a KBA and as an industry, we've also followed suit and we've shown consistent reductions in the cost of credit. And this is a good thing. It's a good thing for the economy as it leads to more affordability and it expands the credit availability in the market. Of course, on the foreign exchange side, we've seen stability since around February of last year, within the range of 129, 130, 128 to the dollar. And that stability and also availability of dollar liquidity in the market has been a positive. Many of you will remember in 2023, we had much higher rates, and also the liquidity was not as good as it is today. So overall, you know, the macros have been trending in a positive direction. Of course, in there are challenges. There are specific sectors in the economy that have not done well, and as you will see later on in some of the numbers, that has an impact. We've also seen disposable incomes and spending reduced over that period of time. And so that presents its own set of specific challenges within the environment as we continue to do business. If I can move from the macros more into the Absa world, I'll start with a slide that talks about, you know, where we are in terms of our geography and in terms of our footprint, and really some 2 or 3 key messages there from that slide. One is the presence that we have internationally, and it shows there on the map that is on the screen. 2 is presence on a Pan-African basis, and we are one of the large Pan-African organizations serving customers in multiple countries in the continent. And some of the statistics shown there really of what the Absa group is on a Pan-Africa basis. A significant balance sheet, as you see there, over 40,000 employees, and many points of presence as well. And then the third message is really Kenya and our presence in Kenya as a large systemic, you know, retail, commercial, and universal bank that provides financial services in many geographies within our country, and plays a very important role in the development and growth of Kenya. And we've shared some of the key data points there. Branch network, which is quite important, over 10,000 points of sale positions, the agency network of over 3,000, which in our last report was not there. This is a 2024 execution largely, and of course a balance sheet that has now gone north of $500 billion Kenya shillings. So that's who we are as an organization. Before I come to the strategy update, the chairman shared the purpose statement of the organization, empowering Africa's tomorrow together, one story at a time. It's a big and powerful purpose statement, and one that we try to live up to on a daily basis, my team and I, as we serve our customers and as we serve stakeholders in the market. For us, it centers around our customers. We place the customer at the center of everything that we do. You know that one story at a time is very important to us. Every client, whether it's the large corporate to whom we dispense billions of shillings, or the small startup entrepreneur who uses our digital apps to get 5,000, 10,000, 20,000 shillings to start a business. For us, every one of those stories matters, and we've shared some of the examples there of what we do in the course of that journey. Some sectors, as I said, went through some difficulty during the year, significant restructuring and rescheduling to support our customers as they work through the cycle that their businesses face. We see disbursements, even though you will see the lending book is generally within a range-bound space, there is churn within the book, and in the course of the year 2024, in terms of new lending to customers, we disbursed 180 billion to different sectors, as shown there, starting with new businesses, startups, MSMEs, large corporate organizations, and so on. But it's not just about balance sheet and balance sheet deployment. It's also about what we do with our customers in terms of enablement, empowerment with information, and we do a lot of training activity as well, reaching, as we show there, over 35,000 individual customers as well. So our guiding North Star as an organization is that purpose statement and what it means for us as we engage with our customers. Before I go into the update with regards to the strategy, I'm just sharing a slide that we have in all our public spaces, and it talks about what that strategy is and what we focus on. We are midway in a 5-year strategic execution journey. We're actually kind of at the midpoint, in the middle of year 3 of that journey. And the updates that we are giving today build on the updates that we have given previously through this strategic journey. The key pillars, and I think Chairman went through some of them, I will not repeat, are shown there. The 3 large business focus areas that we have are right at the top of that circle, and these are traditional strong areas that we focus on, running a consumer franchise that is market leading, driving for market leading position in business banking, and of course, a large corporate and investment banking unit that presents regional and national opportunities for our customers. And the 3 enablers of talent, digital, and brand as an asset. That is really the crux of the strategy that we continue to drive. And I'm going to provide in the next few minutes some core areas of update in that regard. In the consumer bank, we continue to see growth in client numbers, 10% up year on year in terms of number of customers that are coming in, which is a great lead indicator for any business in terms of financial performance. We significantly increased our agency banking presence, as I mentioned earlier. We are seeing significant increase in digital disbursement, and we continue to drive our affluent proposition, which is one of the very strong areas in the consumer bank. In business banking, we are market leading in a number of areas. We've seen good growth in the Islamic banking proposition, one of our strong areas in that regard. It runs under a brand name of Lariba. We have invested in technology in business banking that helps us address the needs of that business ecosystem. We have a leading Islamic banking proposition, as I said, and we've just invested in digital account opening that allows customers to engage with us digitally as well. In corporate, again, we continue to drive a self-service culture. We have quite a good percentage of our corporate customers as digitally active, and we are starting to see very good flows coming out of some of the digital investments that we have made in that area. And in the course of the year 2024, we launched our custody business in corporate, and we've already won a few good mandates in that business. And within the enablers, we continue to invest in the digital side of the organization, 3 billion shillings of investment so far. We continue to automate the back office and improve our efficiency. And you will see later, as Yusuf presents, what this means from a numbers perspective. We've done a lot of work to ensure that as customers interact with the bank, that it is digitally enabled, that it's easy to do business with Absa. And that's one of the things that we are investing a lot of funds in. And on the brand side, we continue to see improvements in the connection, the relevance scores of our brand. We continue to be recognized as a #1 trusted banking brand. We did last year launch the Absa Foundation, which is very, very important and very crucial for our sustainability journey as an organization. And we hold ourselves accountable through regular publication of our sustainability report. We are one of the few large organizations that regularly publish it, and we hold a public event to show what we have done in the area of sustainability on an ongoing basis. So that's a very, very important area for us. I'll go very quickly through a few slides that just give a sense of where we are on each of those areas. I won't go into the detail. The first one speaks to the digital journey, and we've shown some numbers there in terms of where we are with regards to transaction volumes and how many of our customers self-serve and use our digital propositions. Timiza, which is the digital lending product and the digital saving program that we have, continues to show very good growth as well. And we see more and more of our customers define us as their primary bank as we go forward. We see continued growth in the digital savings products, and we see the diaspora payments space as a new and developing opportunity. As you all know, diaspora remittances are one of the top foreign exchange earners for the country, and we've gone into a few partnerships that are showing great promise and showing a significant increase in the transactions that we do in that space. The next slide, I won't do a one by one there, is about innovation and new products that and services that we have launched in the course of the year. Again, really the core message being we have the existing business that we focus on, but a very big part of the effort in Absa is also to say what are the new areas that we need to be investing in, and how do we drive a culture of innovation in the organization, and how do we use everybody's gift within the organization to innovate products. Some very, very good ones there. Short-term digital lending, I'll lift that out. The Infinite Card, which is for the affluent proposition that I spoke about earlier, we launched it in the course of last year and is doing very well as a product, and we are getting very good client feedback on that as well. So some great work done in that space, some good products for SMEs as well, and just sharing, and these are just a few really examples of what we are doing out there. As I move on, the chairman spoke about sustainability as a key pillar of the execution that we do in the organization. And it's something on which the board and actually the stakeholders out there track the management team and to which we hold ourselves faithful. Last year, we launched the foundation to help us as a vehicle to do more in the space of sustainability. And our foundation has 4 foundational pillars. focusing on developing new entrepreneurs and helping young business startups to grow through financial support, as well as enablement and empowerment through training. We're very happy with the progress we've made so far. We're also focusing on building education and skills for young people who are joining the job market. We have a program called Ready to Work, which has been very successful, and we have a few other programs in that regard. Climate and climate issues, protecting our natural resources is another area where we've partnered with other large organizations such as the telecom industry, other banks, and other organizations, as well as the government of Kenya, to drive the agenda of the foundation in that space. And we have activities in many different parts of the country in that regard. And of course, in countries such as ours, sometimes there is a need for support on event-based issues, such as the flooding that we had in the middle of last year. And whenever we are called upon to do that, we do support as an organization. So that's the sustainability journey. There's numbers there in the next slide. I will not go into each and every one of them, but we track ourselves on how much we are dispensing that we define as sustainable finance. We look at the specifics around women-led organizations. For all the lending that we do, we ensure that it meets the requirements from a sustainability perspective. And we've shared some numbers there in that regard. And I'll not go through the detail there. On brand, we continue to drive our brand presence and visibility through a few key brand properties. Sporting is one area that we've spent a lot of time on. Kenya is a sporting nation. You can't talk about brand Kenya without talking about athletics. And in Absa, we support the Kip Keino Classic and other athletic events that happen in the country. And we are very proud to be associated with Kenya's athletic prowess. It's something we are really proud of. And that event there where you see Moses and Eliud Kipchoge is an event that happened in Eldoret a few weeks ago, which is the Sirikwa Classic. It's part of the World Cross Country Challenge. We also sponsor the Kenya Open, Magical Kenya Open, which is part of the global tour and one of the best tournaments in the world. Incidentally, when the Kenya Open was going on, our group chairman of Absa group was traveling in the US, and he watched some of the events, and he said he was very pleased to see the Absa brand out there in the world. And we are proud of the partnerships that we continue to place in sporting and other activities as we drive the brand agenda as a whole. Lastly, before I conclude, is really to look at our talent journey. We consider ourselves the home of talent in this country. We position ourselves as the place where every banking professional worth his or her salt wants to work, and a place where banking professionals want to stay. We've shared some key numbers there. We track diversity as a very important metric, and you will see that in our general population, it's basically a 50-50 with a slight female majority. And in the leadership space, we are at 47-53, which is quite close, but we would like to do 50-50. And that journey continues. As you saw, some of the new directors that were introduced earlier are very, very new joiners, and I think that journey continues. But we don't look at diversity just from a gender perspective. We look at diversity in terms of thought, diversity in terms of generation, age. Under the chairman's sponsorship, we have something called the Young Leaders Council in the bank that is consisting of colleagues under 30 who work with the board and the executive team to give us a challenge, new ideas, and new ways of doing things in Absa. And we found that initiative and many other initiatives that we do with young people, creating the real diversity of thought and the energy that we need to drive the organization forward. We measure our employee engagement every year. It's a survey that is done anonymously. Those numbers that you see there, 70% positive engagement, which is better than the global norm for organizations such as ourselves. The 7.9, which is a score that is out of 10, job satisfaction index, and a number of other metrics that we track to ensure that we are in touch with the engagement levels within the organization, and we keep attracting and keeping the best talent in the banking industry. So I'll come to do a wrap-up and a conclusion later on once the numbers are shared. But I would like to stop there and take this opportunity to invite our Finance Director, Yusuf Omari, to come and share the numbers with us. Thank you very much, ladies and gentlemen.
Thank you so much, Abdi, and thanks, Chairman, as well. Colleagues in the room, our investors and media, all stakeholders, good morning. An exciting morning. We see the rains are here, and we're always looking forward to this because then it drives some of those macros that both the Chairman and Abdi has mentioned. And just in terms of a background, if you look at what happened last year, starting at the beginning of the year, exchange rate to the dollar, Kenya shillings, of 160. Within one quarter, that came down significantly. Interest rates on the side of, say, T-bills, as high as 16%. Towards the end of the year, that went down to 10%. Today is actually lower than 10%. So you can imagine the kind of macros that the industry has to go through. And it's a challenge to the board, to the management, to make sure that we are positioned in the right way when we are looking at that. So I think if I could just start on the balance sheet, on our financials, you see that on the first side, loans and advances, you're seeing for this reported period, the prevailing rates, these are actual exchange rates, by the end of the year. You're seeing a drop of 8%. But then for us to be able to appreciate what does this really mean from a constant currency perspective, hence the reason that I started by saying the dollar in terms of the exchange rate to the Kenya shillings exchange rate to the dollar was above 160. So on a constant currency basis, it's flat. And this is for the simple reason that about 32% of our loans are actually in foreign currency. So if it strengthens, you get an impact on that. If it weakens, the same. I think what is really important, stakeholders, is that while you're showing it's flat on a constant currency or even a drop, we were able to advance in total of 180 billion shillings to our customers in the year. And then, of course, last year we saw a preference for short-term loans. We saw an impact, especially to the consumer businesses, shying away from going for long-term, loans. We saw the businesses' preference to go for things like overdrafts, trade loans. Those ones were still part of this. And then on the side of consumer, again, preference was short-term. So the digital lending which Abdi has been able to share, you saw that picking up, 25 billion lending last year. And then the preference for cards, again, short-term, payroll loans, again, short-term, all of that were able to support the businesses. And hence that 180 billion gross lending. What you're seeing here is net, but then you can see over 50% of that net is what we lend from a gross perspective. In the year, we saw the yields picking up. Lending yields went up 250 basis points to about 16% on average. And that was a reflection of the macros that, Abdi has been able to share. So that's really from a loans and advances perspective. On the right side, you see the deposits. Deposits picking up 1%. This is what we call the prevailing rates. Again, to remove that element of exchange rate, on the left, you've seen constant currency at 7% growth. I think the most important point here I would like to raise is the structure of this deposit. At the beginning of the year, we started with about 55% of this deposit being transactional. So 45% you say TDs, term deposits. By the end of the year, we were able to bring that down significantly. The structure there is 60-40, 60% being CASA, transactional deposits. And really that helped us to contain the rise in cost of funds. Within this period, we saw cost of funds going up 160 basis points to an average of about 5.1%, which is really compared to, on the side of yields, you're able to see that we were able to manage our margins within that period. If I then move to revenue in the period, you're able to see revenue picking up 14%. And this is double-digit growth rates on the key drivers of our revenue. You see net interest income picking up at 15%. And then the non-interest revenue, the non-funded revenue, picking up also at 11%, which is a good outcome considering then, from a diversification perspective, that we are able to drive not just through reliance on the balance sheet, but then also on the non-funded revenue lines. Just to dive on that non-funded revenue lines, all our subsidiaries reflected growth year on year. So if you look at this, we have a securities business, we have an asset management business, we have a custody business. I call it the new kid in the block. We launched that last year. And then we have our asset management business as well. All of this, including banker, they reflected double-digit growth rates within this period, and hence you're seeing that non-funded income line picking up. Other lines there, trading income, mainly on the side of bonds, that picked up on a year-on-year basis. And then, as I mentioned, on the consumer business, preference for short-term facilities. On this specific one, it was mainly to do with cards. On the NII, the products, I mentioned that, mainly focusing on short-term loans, trade, overdraft, payroll loans. That was what informed that 15% growth. Remember what I mentioned, managing our margin, pick up on 250 basis points on the lending side and 160 basis points informing that those numbers. I think on the right-hand side, it's for us to appreciate the diversification within the wholesale business. You can see the proportion there at 52%, and then on the side of the consumer at 48%. The importance for this, ladies and gentlemen, is just to make sure that we have that diversification. We've seen different impact depending on what happens on the macro. Like last year, our consumer business clients were significantly impacted because of the macros, and so you would see this year that starts changing. We've seen the rates coming down, towards the end of last year. Right now, as mentioned, T-bills below 10%, and so you find now most of our consumer customers now coming out and having that appetite to go for loans. It's affordable, and so the impact sort of like gets balanced when we look at it from the two businesses. If I look at our efficiency agenda, you see that growth of 9%. You tie that down to the ratios there at the bottom. Revenue picking up 14% with the cost at 9%. So a positive jaws of about 5%. Really an emphasis. We are getting incremental revenue for all the investments we are doing over the period. And this becomes a mantra for us. We invest a shilling on cost to be able to deliver 2 shillings on the side of revenue. That becomes a very simple mantra that we are able to use. A lot of investment has been covered by Abdi. A lot of automation, back office automation. Abdi mentioned 65% of our back office has been automated, and we are pushing that, a big agenda, 3 billion shillings investment last year, and that continues. We've come up with a lot of alternate channels, especially for our consumer business. Over 90% of the transactions at this point in time are conducted outside the traditional brick and mortar, the traditional branches. Again, that drives the efficiency agenda. We are looking at agency banking. Abdi covered agency banking as an outlet. We've revamped that with over 3,000 outlets. And all of this is actually evident when you start looking at these cost-to-income ratios that we are reflecting. Consistently, from a high of 47.9 back in 2020, you see that ratio now at 37.7%. Really, a key two criteria: the efficiency agenda, the automation, the digitization of key customer journeys on one side, and then, of course, what we are seeing as we execute the strategy, revenue, picking up, which then helps on that agenda. Specifically, if we look at the cost, you see an 11% growth on staff cost. That picks up to 13 billion shillings. Within these numbers, we hired about 280 FTE, and this really speaks to the investments that we are doing, mainly on the front line. Staff who are dealing with our customers on a frontline perspective. Of course, there's an element of salary increment within these numbers, and then some levies that came. The taxes that were introduced last year, like, for example, if you look at the housing levy, of course, this also has an impact on that 11%. The last line is really depreciation, the investment that's spoken to, the 3 billion technology investment that we put in last year. And then really lastly there at the bottom, 5% growth in other lines. Really the key here is an efficiency agenda, which is really tied to the core strategy that Abdi has already alluded to, that is informing this investment. If we look at the risk management front, you see our impairment going down 2% to 9.1 billion shillings. You see the makeup of that. There's an element of the portfolio quality with all the macros that we've shared here, with increase in taxes last year, which impacted especially the consumer business. We saw delinquency picking up, the issues of affordability, the ability to repay the loans. And so we picked up impairment. We're showing that to the tune of about 1.1 billion shillings, and this is incremental to the previous year. The FX benefit, any facilities that we had lent out and they were struggling, the fact that the local currency strengthened, of course, we had a reprieve. And then the last bridge there, you see the recoveries of about 0.8 billion. I think with the strain we saw last year, with the current macroeconomic environment, it's evident in the entire industry. You see at the top there, NPL ratios picking up in the industry at around 16.4. Ours picked up at 12.3, but really way below what is at the industry level, and it just speaks to the prudency of our lending practices that has consistently been a core agenda that we are always pursuing. At the bottom there, we are showing the absolute NPL numbers, 42.5 billion. and then sharing also the coverage, the sufficiency of the provisions that we are making. You see that at 66%. The sectors that have been impacted, if you to look at that, 42.5 billion, manufacturing is a big component of this. The one on the consumer, personal, household impacted these sectors as well. And then we have the real estate sectors that were also impacted, and hence that growth in the NPL figures, and of course the NPL ratio as well. As I move then to the summary on our financials, covered on the revenue, covered 14% growth, double digits on the key variables on revenue, cost at 9%. You see a 28% growth in profit after tax for this period, and really informed by the top line. Revenue growth really, a key driver to this growth. And on the balance sheet, while impacted on the macros, the impact I mentioned on FX, really driving the agenda on the margin, has been able to deliver these results. So a good set of results, stakeholders. Really, I believe our shareholders are impressed with the numbers that we are sharing, and really an area that we have consistently. Abdi mentioned the strategic period with the middle of the 5-year strategic period. We've executed on quite a number of the key priorities. We still continue, executing on these ones without belaboring the points that Abdi mentioned. And I know Abdi, when it comes to on the conclusion section, will be able to highlight the focus that will be picking in this current period. If we were to just look very quickly on the ratios, we covered the cost-to-income ratio in the earlier slides. The loan loss ratios picking up at around 2.9%. For the reasons that I had already mentioned. We saw our loan-to-deposit ratio significantly improving from a high of 98 sometime last year to now at 84%. Of course, the rates have now come down. You start seeing as now, the loans and advances, and not just ourselves, but the entire industry starting to peak. And then the ratio that is really important to shareholders, which is the return on equity, significantly above our cost of equity at 24.5%, which really means the funds that you've provided us are being put to the right use, and the returns that you're getting, you can see clearly way above your cost of equity. On the capital ratios, without going through each of these ratios, the comment I would just say, way significantly above the regulatory limits, be it on the core Tier 1 ratio or the total, and also on the side of liquidity ratio. These are way above the limits that we have. So a well-capitalized business with sufficient funds, liquidity, that can be able to, that gives us a good platform to execute on our priorities in this current year. So now, just in terms of my final slides, before then I request my MD to come, it's really a guidance. What do we see for this current period and beyond? I think on the balance sheet, deliberately saying there the keyword sustainable balance sheet growth. I know my chairman kept on saying sustainability is really the mantra. You can imagine last year if someone said double-digit growth rates in balance sheet, and then interest rates peaked to the high of 16% on the T-bills, and you can see on the industry, Abdi shared a slide as at November, loans and advances was down year on year by about 1%. So really the key word here is we want to be sustainable. We will pursue sustainable growth on our balance sheet. We've seen rates coming down significantly. It doesn't mean that tomorrow it's affordable simply because the rates have gone down. The other aspects of, the taxes, the recoveries that our customers are going, you've seen NPL ratios picking up. And so it will take time. And so for us here is to make sure that it's sustainable. I can't tell you double-digit growth rates, but by all means, you'll be able to see loans and advances picking up this year. On the efficiency, low 40s is the target that we are putting. Someone might say, you're already at 37, why are you increasing? But it's really that agenda of making sure that we are investing, as part of executing on our strategy. And then on the last, on the second last there, returns on shareholders, the mantra for us is always above the cost of equity by 5%, just saying, you have a better way of putting your funds, because then you're saying it's actually 5% above the cost of equity. And then really on the balance sheet, the key mantra there really is the quality that we are putting through. And that's why consistently over the years, the NPL ratios for us is always significantly lower than what you see in the industry. I think just in conclusion on this, we are moving away from growing the balance sheet by all means, growing revenue by all means. Our key focus, you will always see, will always be tied to returns. It's the returns that we're giving to our shareholders that will really inform all the decisions that we make in our strategy. Ladies and gentlemen, thank you so much. Let me request Abdi to come back. Thank you.
All right. So we are on the final 2 or 3 slides. One is really just a summary, an overview of all the numbers and strategic updates that we have provided. We've shown consistent revenue and profit growth. We've shown even in a flat lending environment, 180 billion of new lending. That shows our commitment to the market. And as Yusuf said, we expect, it's a natural outcome of what's happening in the interest rate environment, that we'll see more lending, not just in our bank, but in the industry as a whole. And that's a good thing for the economy. And we look forward to that. We continue to show greater efficiency as we drive down costs, as we automate, as we digitize. And we continue to show improvements in the return on equity. And so the word is really consistency, staying true to the cause of the strategic journey that we have committed to, remaining consistent on the key headlines, of course with flexibility, tactical flexibility, as and when the context changes. One of the focus areas is, of course, shareholder value. And for us, that remains one of the critical stakeholders that we continue to address. And there's a slide there that shows the share price journey that we have been on since 2021, and really a 2x number over that 4-year period. And in addition to the dividend payments, really the value of the share is another important piece of information in terms of total shareholder value. And lastly, it's really the dividend announcement, and it's just to say the board, under the leadership of our chairman, Charles Mushene, has proposed the payment of final dividend for the year 2024 of Kenya shillings 1.55 per ordinary share, bringing the total, remember we had declared an interim, to 1.75 to be paid on or about the 22nd of May. That presents a 13% year-on-year growth in terms of dividend, and continues to be well within our policy of creating a good balance between the dividend payments that we pay to shareholders and ensuring that we have bandwidth for reinvestment and growth of the organization. So with those few remarks, I would like to say thank you. Thank you for your attention this morning. We will now go to our Q&A session. I think, Charles, you will organize that. But really, thank you very much for the support, and our commitment is to continue working within this strategic journey and continue to deliver consistent results as we have shown, and continue to put our customer at the center of everything we do, and be led by our purpose statement. Thank you very much, ladies and gentlemen.
Thank you very much, Chairman. Thank you, Abdi, Yusuf, Abdi again, for spending time, just explaining what it is that we were up to in the year 2024. I do hope that, to those of you in the room and those who are following out there, that you now have a better appreciation on the journey that we are on as an institution. Many big numbers that we are really proud about. And every year when we stand here and we do this, it's just, 2 or 3 people who come and stand and speak on this podium. But the reality is we speak on behalf of more than 2,000, of our colleague force, different people that are in different parts of this country, working hand in hand with our customers to make, to make those stories possible. And for that, we are grateful. I think, again, to say, again, lovely numbers, but as it says in our purpose statement, we care not just about the big and nice numbers that we come and talk about on these platforms. What we care most about is the stories that we are changing out there. So therefore for us is the teachers, the lawyers, the doctors that are able to advance their life, just because we partnered with them. It's about the business people in Gikomba, in Bungoma, in Mombasa that we are hand-holding and working together on a day-to-day basis. It's about a student who is in campus and now they're able to pay, their school fees. Their parents are taking care of them. It's about the children playing in homes, that we have supported our customers to put up. So for us, it's really the stories, behind every human being that we interact with, and that's what keeps us going. I think we've come to the end of the session, particularly for the people that are following, the procession of this program online. And we thank you for making time to be with us. We look forward to continue connecting with you as we keep updating you on the progress that we are making in our business. For those of us in the room, we'll move into a time of taking questions and answers, and I'll just ask the team to help put up maybe 2 seats here for Abdi and Yusuf. In the usual manner, we suggest